I had to laugh last night just talking about the overall market, the JPM last night. They say, to be clear, the flows are far from bullish, but a lot of this is being driven by positioning, performance, and emotion. The same CTAs that were buying above the 50 and 100-day are now selling it back below. You agree with that?
I think positioning is playing a really big role. As the Journal reported, quant funds bought around $31 billion worth of stocks last week. But zooming out a little bit, people are super bearish out there. Institutional investors are shorting futures at the fastest pace of the past decade. Mutual funds increasing their cash positions, hedge funds delevering. So what I'm hearing is that light positioning means that the market can be more susceptible to these kind of big ups and downs that we've seen. And for tech in particular, we've seen investors grow incredibly bearish. Investors recently yanked around $2.5 billion from tech funds, the most since February, when the sell-off was first accelerating.
All right. Is that, Mike, is that sort of what B of A means when they say that some of the flow action is abysmal, I think?
Yes, that fundamental flows, real directional, kind of long-only, stickier money. It does not have a very strong belief one way or the other within this range. And so in the absence of that, I do think what you have is the hyper-tactical systematic traders are the ones that are setting the marginal price. It's always the way it is in a high velocity and high volatility environment. When it comes to the, I guess, sort of the honeymoon is over phase for tech, it's been the story for much of this year where people were very crowded in that part of the market. It was considered to be an all-weather area, and you're seeing it bleed lower. I don't know if that means you can point to a moment when it says we're done. We finally dried up in terms of the selling or the underperformance, but it's been pronounced. I don't think, among all the problems this market has, people being overcommitted to stocks and being too optimistic, those are not among them.
Yeah. But Gunjan, at the same time, it seems like end of spring, maybe early summer, we're hearing a lot of people say, beware the bear market rally. Here's what it might look like, right? And at the time, stocks have been low, and I think a lot of people thought, oh, well, who's going to believe in a bear market rally? But then it seems like some people did, right? So, I mean, is this the classic scenario that we heard warnings about a few months ago, but we still end up somewhat surprised?
It's funny, when I kept talking to institutional investors, they kept saying, look, I'm scratching my head at this rally right now. This does not make sense to me. But I think for a little bit, it did seem like inflation was coming down. It seemed like that soft landing scenario might actually happen. So I think yesterday was a real wake-up call for that and for the tech trade in particular. But I think a lot of investors are still kind of holding out hopes that we might return to the environment that we saw during the pandemic, even before the pandemic, when what worked? It was being long treasuries, being long growth, being long tech. They're saying eventually, I think, economic growth is going to fall. I may still be betting on that Fed pivot, and maybe we will have a return to that environment that we saw in 2019 when the Fed did start, cutting rates after increasing them for quite some time, and the tech trade surged. Of course, yesterday showed us that trade carries significant risks.